Hey everybody, how is it going today? Welcome back to the channel. Well, the market is acting rather strange today because despite hitting all-time highs, most of the stocks in my portfolio are down. And when this happens, usually a pullback is right around the corner. So in this video, I want to talk about that a little bit and what I plan on doing about it. Now, before I get started, as always, everybody, please remember I am not a financial advisor. All of this is just my opinion and for entertainment purposes only. Please make all of your own trading decisions. All right, well, I'm going to start off this video talking about the market averages because I don't know about you guys, but I've been seeing some pretty strange things with my portfolios today. Even though the market averages are rather strong, most of the stocks in my portfolios are down. I probably have 3 out of 4 stocks in my portfolio, all of my portfolios that are down today. And I'm looking at the market averages, and all the market averages are up. So, you know, these things are cap weighted. So there's a few of the biggest stocks in the market averages are what's pulling this thing up. But normally when I see something like this happening where a majority of my positions in my portfolio are down when the market is up, especially when the market has been trending up for a sustained period of time. You can see this thing has been up above that 8-period exponential moving average for several weeks now without a dip below it. Usually when my portfolio starts, showing some weakness and the market is still strong, a market correction is usually right around the corner. And when that happens, I don't take on any new positions, any new longs, I should say. But sometimes I try to play a position to the downside, whether I want to buy some puts in a stock or just buy some puts in, the QQQ, or buying some of an inverse fund. That's what I like to do when something like this starts happening in the market. Now, with how strong the market has been, I wouldn't expect it to be that big of a pullback. Probably just a little bit of a pause, or a little bit of a correction. If we came all the way back down here to right around 382.50, where the old high was before we broke out a couple days ago, that would be a completely healthy pullback, and it also would just be pulling back to where the 8-period exponential moving average is right now. So I think that would be a healthy pullback in the market, especially if we get a hold of it, and then another nice green candle, a nice big green one like this. I think that would be a perfectly healthy thing to happen, and actually the best case scenario. But as we can see, since the Qs jumped above these two moving averages right here, jumped above the 8-period exponential moving average and the 21-period exponential moving average on the 14th of October, that was actually when I got really bullish and started putting on some more longs. I was a little cautious on this day when it jumped up to that 50-period simple moving average right here, but you can see the following day it sliced right through it, and we've been in a nice clean uptrend ever since. But I do think this uptrend is getting a little long in the tooth, because we are, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days in a row without dipping below that 8-period exponential moving average. And as you can see, we are extended quite a bit a ways from it right now. So just having a pullback to that 8-period exponential moving average would be totally healthy and totally fine. But let's take a look at some of the other averages. Let's take a look at the Spider, which is the S&P 500 ETF, and you can see basically the same story, still extended away from the 8-period exponential moving average. So overdue for a pullback as far as I am concerned. We're out to all-time new highs, of course. And if we look at the Dow Jones Industrial Average, we can see the same thing, all-time new highs and extended away from that 8-period exponential moving average. So this is what I would expect a little bit to happen right here. I'm not expecting a major pullback, but I wouldn't be a bit surprised if we get one of these, 2 red days in a row where it goes down to the 8-period exponential moving average. This is what I'm kind of expecting on the Qs. And then, a hold of it would be, very bullish as far as I'm concerned. I would definitely be buying on these 2 days right here if that happened. And let's take a look at the IWM. I've been talking about this one for quite a while, and we are finally getting that breakout. Now, I'm really hoping that we can get a little bit higher and then hold it, but I've been watching this consolidation, it seems like forever, and if we can get a breakout of this consolidation and a hold, I think the markets are going to be off to the races. So it's going to be really interesting to see what the markets do in the next week or so. But one thing that I am looking at is the SQQQ, which of course is the inverted traded NASDAQ fund, the triple short of the QQQs. And one thing that I pointed out in the Patreon group, let's actually go to the hourly chart, is, this range on the SQQQ is getting rather tight. It's making a descending wedge, which of course usually resolves itself to the upside. This is kind of what I'm expecting, just a small counter trend to the upside. And of course, if the SQQQ goes up, the QQQ itself goes down. So this is kind of what I am expecting, or what I am planning on guarding against. I don't know if I'm going to take a position in the SQQQs. I do have another stock that I want to show you here in a minute that I am considering buying some puts on, because it looks very bearish. But this is kind of what I am expecting. If this doesn't happen, that's fine. I'm not taking any of my longs off the table right now. So if this doesn't happen and, I get short something and that doesn't pan out, most likely all of my longs are going to make more than enough money to make up for that. But if we do get a temporary pullback in the market, this would be a decent way to capitalize on it. So those are my thoughts on the overall markets right now. Let me get into a trade that I see setting up. All right, so instead of playing the SQQQ, if we do get a rollover in the market, one stock that I am looking at today is IMAX. I'm actually considering buying some puts on IMAX. Haven't done it just yet, but I'm talking about that in the Patreon group. And by the way, if you do want to know what we are buying and selling in real time, I do have a Patreon group. The link is down there in the description. It's only $10 a month. And since we're on that kind of subject, if you don't mind liking the smash button, it really helps out the channel with the YouTube algorithm. And also, if you enjoy seeing these type of trades that I'm about to show you setting up, and you want to see more, make sure you hit that subscribe button if you're not subscribed already, so you don't miss out on any future potential trading setups. But getting back to this IMAX chart, one of the reasons why I like IMAX to the downside is it's making a little bit of a double top formation, and we're also getting that rollover in the MACD down here. It's already broken through this support, and it looks like it is starting to fade up into it. So this is the perfect area where you either want to go short or you want to try to play some puts. And if you're not sure what a negative divergence is, let me draw it on the screen for you right here. This is called a negative divergence in the MACD indicator. It's when you get a higher high in the stock price, but you get a lower high in the indicator, creating that divergence. And these quite often lead to a move to the downside once support has already been broken. One of the mistakes that I used to do with these negative divergences is I would try to play them as the stock was still going up. Now I've realized that if you wait for it to break that first level of support and then try to get in on that counter trend, it weeds out a lot of false signals, and that's exactly what's happening right now with IMAX. And if I zoom in just a little bit closer, one of the obstacles that is going to have to the downside is this 50-period simple moving average. So usually stocks find support there. Plus, it also bounced right at that level just a couple of days ago. So there's a couple layers of support right there. Let's go to that 15-minute chart and back it out a little bit. Just take a closer look at what is going on. But you can definitely see this double top formation and this clear cut. It was support level, but now that it's below it, it is resistance. So if we zoom in a little bit, we can see it's starting to fade into that resistance area. So I'm expecting a bounce off that resistance area and then a rollover closer towards $18 a share. But we do have this area of support hanging out right around $18.50. Like I said, on that daily chart, the 50-period simple moving average was rising into it, and also we have some support from later last month and from a couple of days ago as well. So that is one thing that I'm going to be looking for. I might even take profits rather quickly if it does roll into this support area. If it rolls into it very hard and looks like it's going to slice through it, I'll probably sit tight. But if it kind of has a weak move into it, that's probably going to be the logical area to take profits on those puts if that does happen. But let's go back to the daily chart real quick on IMAX. One of the things that I really wanted to point out about this indicator that it's making right now is, let me get this stuff off the screen real quick so we can see it a little bit better. Um, Even though the stock is starting to bounce up a little, we can see that the indicator itself is continuing to accelerate to the downside. Now, this usually happens when a stock is about to roll over again. So that's another reason why I like this trade, is because the MACD lines are actually starting to accelerate away from each other a little bit. And let me see if I can find a spot in the past where that happened. Here's a spot right here. That actually looks pretty much exactly what I am talking about right here. Let me see if I can situate this chart a little bit better. But you can see we had this big rollover right down here, and then the stock kind of faded up a little bit. It moved up and then it pulled back down once it hit that 8-period exponential moving average. But you can see once you've had that sharp move down, a little bit of a counter trend to the upside. And let me draw this on the chart real quick. You can see as the price kind of goes sideways to up, and if you look down at that moving average down there, it is continuing to spread apart. And then once the stock goes sideways for just a little bit longer, you get that eventual rollover. So that's one thing that you also want to be looking for in an MACD negative divergence, is when these lines continue to spread out, even though price is either fading up a little bit or going sideways. If you get that, usually get a little bit more follow through to the downsides. That's another reason why I like this trade right now. I have an order in to buy the $18 put at 25 cents a piece. There's 17 days left on these options. As far as I can tell, I haven't been executed just yet, so I might have to raise that order up a little bit to get executed on that trade. But man, I really like the way IMAX is setting up right now. All right, well, before I close the video out, I just want to do an update on some of the stocks that I've been talking about over the last few videos or so. And I'm going to start off with Lordstown Motors. I was actually talking about this one yesterday, and during my recording, it looked like it was going to stop me in once it crossed $5.60, and it did right there at the end of the day. It was a little bit weak today at the open, I think mainly because Tesla was selling off just a little bit, and that kind of dragged some of the EV stocks down. But as we can see, it is breaking out of this bullish pennant formation to the upside, so hopefully it continues to follow through. There is going to be some resistance right around $6 a share, so I'm going to be watching that closely. Hopefully it can go through it. I'm thinking that it should, being that this base is so long, it should have enough to push it through 6, but we'll have to wait and see on that one. Let's go back to the daily chart on this one, and let's jump over to NKLA. NKLA was one I was talking about yesterday as well. I actually had an order in to buy some options. For whatever reason, they didn't get executed, and they should have, so I kind of held off on NKLA. I haven't bought it just yet, but I am still liking this pattern. We got a nice breakout. Today is the first day of the hold, so that is obviously a good sign. Already made a higher high for the day, and it's making a higher low than it did the day before, so that is a good sign as far as the trend continuing to go up. So I'm going to continue to watch NKLA, and if it continues to make a constructive pattern, I'm probably going to take a position in NKLA as well. And some other stocks that I want to talk about that I talked about a few videos ago were the copper stocks. And the copper stocks, some of them are actually starting to pull back and look rather attractive. One of them is SCCO. I haven't bought any yet. I was either waiting for a breakout of this formation here or a pullback, and that is exactly what we are getting in Southern Copper. And this thing is pulling right back to a support area as I am making this video, so I might be pulling the trigger on this one today or tomorrow. But definitely a very nice pullback in copper. I am bullish on copper for the long term, especially if we continue to see elevated levels of inflation, which I think it's pretty much a slam dunk from here. You never know what is going to happen, but it's certainly indicating that inflation is going to be around for a while. And Southern Copper has a dividend yield right around 6.5%. That might be one of the main reasons I like Southern Copper so much. But one of the stocks that are performing the best in this sector is Freeport-McMoRan. You can see Freeport-McMoRan hasn't rolled over hardly at all, and this thing looks like it is ready to bust out to a new high, or a new relative high, I should say, over the last couple of months. It looks like it's ready to break $40 a share. FCX has a tiny dividend. I can't remember exactly what it is, maybe 0.5%, but definitely a better looking chart on Freeport-McMoRan. Another one is HBM. We can see HUD Bay Minerals is also pulling back as well. And I think if this thing can pull back down to this 50-period simple moving average, this blue line on the chart, that's going to be a very attractive level to potentially start a position in HBM. We can see that that level also coincides with this support range right here. So I think the probability of a bounce once it gets down to about 650 or so is rather likely. So if I don't end up taking a position for the long term in HBM, I wouldn't be a bit surprised if I take this take a trade in this one for a potential bounce up back towards $7 a share. But you can see HBM has been stuck in this big consolidation for many months now, and I think if copper, starts to move higher again, HBM is probably going to be breaking out into double digits. So I think HBM is in the middle of a pretty nice pullback. The one that I'm probably the least bullish on is Turquoise Hill Resources. This thing is really starting to roll over. After this big gap down, it got bought up rather quickly, but it's just, it's starting to get weak again. So I think TRQ is definitely going to have to, prove itself before I get into it. And it's probably going to have to break above this trend line right here before I get interested in it, because it just looks like it's continuing to get weaker. So if I do take a position in one of those copper stocks, it's probably going to be either SCCO or FCX, because those ones are looking the best right now. And if I do take a trade in HBM, I'll make sure to make an update in that video. I don't know if I'll be holding that one for the long term. Probably just be a trade in that one. And another one for honorable mention is a lower price one, and that is ORRCF. Actually didn't talk about this in that video, but I had several people pointing out this stock, saying this one is also in the copper sector, and this one is looking dynamite as well. You can see this big run this thing has had since early 2020, and had a deep pullback just a little bit past that 200-period simple moving average, but is now starting to move up again. So don't forget about ORRCF either. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.